Welcome to Quick Takes. My name's Michael Antonelli. I'm a market strategist in Baird's Private Wealth Division. Today's topic is odds to succeed in the stock market. I was trying to think of a fun way to talk to an investor about, hey, what are your chances to make money over any given time frame? So I'm going to lean a little bit into something called evidence-based investing, which I'm super passionate about. Let's kick this off with a game, though. Kind of set us on the right track. Let's play a game. I'm gonna flip this, call it in the air, okay? I'm going to call heads. It was heads. I was right. What were my odds to succeed at this game? 50-50. It's a coin flip, right? 50-50. Odds to win or lose will never change. What are your odds to succeed as an investor over various time frames based on the historical data? Let's talk about that. First, we're going to set the ground rules. We're looking at two different kinds of portfolios. An all S&P 500 portfolio, which is a large cap index, and then a 50-50. Half the S&P 500 and half long-term bonds, which is a kind of portfolio that's more conservative you might use later in your life. Other ground rules, past performance, no guarantee of future results. We know that. There's nothing guaranteed in investing. These returns you're going to be seeing are nominal, which means they're not adjusted for inflation, and I haven't adjusted them for fees and taxes, other kinds of frictions. Your portfolio may not look like these. I get it. You might have small caps and REITs and commodities, and you might have a broad, diversified portfolio that doesn't act the same as the S&P 500. But this is the index I've chosen to kind of put into broad terms what your chance to succeed is in the stock market. I asked Ned Davis for this data. I appreciate them helping me out here. So let's take a look at it. The S&P 500, a large cap US index, if you were to take it from 1925 to the end of November 2020, here are the results. Little over 10% average return. It's the average return over that time frame. These were an investor's odds to succeed over various different time frames. 1 year, 5 year, 10 year, and up. Over any 1 year period, pick 1 year in history, 73% chance to succeed. That means you have a 27% chance to lose. It's high, right? 27. That's more than a quarter of the time. That's a lot. Okay, you take it out, 86, 96, and then it goes to 100. A little trivia here. At about 13 and a half years is where it flips to all positive. So if you were to pick any 13 and a half year period in history and up, obviously, and all S&P 500 portfolio has never been negative. This is at the heart of how we want to think about the stock market and investing in it. What are my chances to win? It's 50-50 here. But these are the chances of an all stock portfolio winning, of making money. If you were to say to yourself, I'm just going to invest for 1 year. 1 year is my idea of investing. You could lose a little over a quarter of the time. It's a lot. It's a lot. The future's unknowable. In the stock market especially, it's unknowable. If that's the case, we want to do whatever we can to put the odds of success in our favor. Where do you put the odds of success in your favor? As you go down here, right? As you go down. The further out, the better your chances of succeeding at investing. Let's move on to the 50-50. What does the 50-50 portfolio look like? Now we've added half long-term bonds to this portfolio. You'll see it's at the cost of the average return. It's now down to a little over 8. The 1 year chance to succeed is a little bit better. It's not that much better, but it's better. But at 5 years and up, it really starts to move in your favor. You've added conservatism. You've added bonds to the portfolio. This is what I'm super passionate about when I talk to people about investing. This is at the heart of how I think about it. You're going to invest. What's your time frame? Let me talk to you about what your chances to succeed have been based on history. Knowing that I don't know the future, and knowing that your portfolio won't act exactly like this, I want to know what the odds to succeed have been. And they're universally higher as you go out. If you play in a casino, the longer you stay in a casino, the worse your chance of succeeding. It's the exact opposite in investing. The longer you do it, the better chance you have to succeed. What are the range of outcomes you might expect? I asked Ned Davis for another great slide. What are the range of outcomes you might expect on these various time frames? And this chart over here shows you the kind of best return and worst return over various time frames. The light blue is all stocks, the orange is bonds, and then the black one is 50-50 bonds, stocks. Remember we said 1 year, chance to succeed was about 73% in the blue one, the all stocks. But you could expect to make 60% or lose close to half your money. That's how wide the outcomes have been in history for 1 year. But as you go further out, they start to narrow. In fact, they narrow so much that once you get out past 10 years, there's no more negative returns for these portfolios, right? Time has worked on that investor's side in all these kinds of portfolios. I want you to really, really think about this, especially as you look at your portfolio over any day or month and say, oh my gosh, I'm losing money. What's happening? The market's going crazy. You have to think about time frames. It's the crucial, critical way to be a successful investor. You have to survive these time frames in order to benefit in the long run growth of our economy and the stock market. Think about your odds to succeed. That is what I want you to take away from this. They go up the further you go out on the timeline. So thank you so much for coming, and I hope to see you soon.